Mr. Tibrewal, what is the single most, I would say, important step that can be taken in your view right now to shore up the Indian economy, even as external threats become more and more unpredictable, right? Just on Feb 1st, you will probably see the announcement of tariffs on Mexico and Canada from the United States. We just don't know what's happening on that front yet. What is the single most important thing?
So, Tamanna, clearly, we are living in a volatile world. And with Trump coming in, we don't know what the policies will move towards. So, export is a question mark. What government needs to do is that do the heavy lifting as it did in COVID. Maybe at the expense of a couple of basis points, maybe a few basis points on fiscal deficit. Don't get too obsessed by it at the moment, because if the growth momentum gets lost, I think it will be very difficult to revive it back. That's the first. And second, I think we have not been up to the mark on the non-tax revenue side, and especially the disinvestment. So I was looking at the numbers of the last 5 years. We have been able to do only 22% of our disinvestment targets, which I think in a buoyant market like the one which we saw over the last 4 years has not been a good one. There are 66 CPSEs listed in India, market cap about 37 lakh crores. Can we generate a bit of that from the non-tax side and support the capex, which has a higher multiplier effect, or try to give some boost to the urban consumption so that also has a higher multiplier effect? So I think both the things combined, along with the monetary policy impulse, making liquidity back to neutral territory, making sure interest rates at some point of time starts to come down and the transmission happens in the actual, I think both have to work together to make sure that the growth resumes back again. Otherwise, if the momentum is lost, to revive that back will be a big challenge in my view, because already you are seeing that in the last 3 to 4 months, the entire narrative from India shining has gone away. So clearly, I think markets are taking cognizance. Corporate earnings growth is anemic, 4-5% of the top 500 companies in India, which is not a great news from an overall economic standpoint.
Okay. Mr. Tibrewal, you said that let's not tinker with capital gains tax, let it settle. But I think most people who are investors in the market are saying that, we might not have to pay capital gains because people haven't made money in the markets. Having said that, on a lighter side, some incentive which you would hope from an equity perspective, equity markets perspective?
See, finally, stocks are slave of earnings, Tamanna. Over longer term, you look at the compounding of Nifty, it's exactly the earnings compounder of 18-19%. And over long term, 14-15%. So I think that if economy is in good shape, corporate earnings growth is happening, we need to not worry about too many smaller things there from a liquidity or other things. I think earnings growth is most important, and earnings growth is dependent on overall economic growth. So I think I would be more focused on growth, that how this government starts to address that now and encourage private sector more to come and invest in India. I think it's a great time when so much of confusion going around globally. We have to market it India from an FDI perspective. Last few years, FDI numbers have been dismal. When you take a net FDI number, it's quite dismal in the sense overall. So we need to make sure that that number starts to increase and hence investments come back on track. I think that something is the only way you can grow and get rewarded in the equity markets.
Yeah, I mean, everyone loves lower taxes if they are there. But having said that, the interesting thing is that what you're seeing from earnings commentary and in the equity markets is also a reflection of the underlying pain. Perhaps it was being overweighed by global flows, etc. But now that tide has turned, it's all for us to see. Thank you so much, DK Joshi and Pankaj Tibrewal, for joining us on this conversation. Really fabulous. And I hope our viewers have gleaned some insights from it as well. The question we were asking today is, what can the finance minister do to boost the economy? Some great views coming in. But tell us what you think. Tell us what you think of this subject and what you'd like to see on the show. We'll be back tomorrow, same time, same place, with the big question.